ConAgra there, the maker of Hebrew National hot dogs, healthy choice products, Slim Jim, Orville Redenbacher, a lot of brands you know, reported second quarter earnings that beat analyst estimates and boosted its 2010 forecast. The company, like other food makers, has seen strength in its consumer food business this year as people eat more meals at home. Monica Bertran is here with ConAgra Foods President and CEO Gary Rodkin. Monica?
Julie, thanks so much. And Gary, thanks for joining us. Now, you've been able to raise full year guidance. This is the second time in about 3 months. You're benefiting from people eating at home more. Let me get your sense about the trends. What data are you looking at that suggests this trend is going to continue?
Well, we clearly do see that people are eating more at home, and they're eating more basics. So they're preparing food. They are very much searching for value, and our portfolio plays extremely well to that value mindset, which, by the way, we believe is going to stay with us for a long time.
What about the price points, though? Obviously, people are looking for value, as you mentioned, but the price points between brand names and the store brands are becoming increasingly tight. What about pricing in your universe?
Well, we really do. We've been really ahead of the game in terms of being proactive on price points. We like to use a term called working backwards from price point. So our pricing architecture is very much geared to staying in the real time and making certain that we are making the adjustments where we need to. I think what you've seen in the industry for the last several months or so is a tightening on that price gap between private label and the branded goods, and therefore things seem to have stabilized pretty much from a private label branded perspective.
Are you going to have to hold your price points, you think, especially with the competition, not be able to really raise and gain more margins then?
We really don't have pricing built into our plans because of the environment and where input costs are today. But what we do have going for us is a tremendous amount of productivity. We've got a very long runway of productivity. We've demonstrated that we can deliver significant cost savings, and we've ramped that up. In fact, we talked about that today. So that productivity, we believe, along with very strong marketing and innovation, will enable us to continue to grow our volume, grow our market share like we showed today, and be able to make our gains from there rather than from pricing.
How much more can you squeeze, though, out of productivity, given that, you know, labor is very tight? Many companies are holding down on hiring.
From an overhead standpoint, we're really operating from a zero overhead growth mentality to try and get more leverage from the current resources that we have. From a pure productivity play, particularly in supply chain, we have a lot of room ahead of us. And it's really end-to-end productivity, more programmatic than just kind of one-off pieces. So as we take a look at our entire supply chain infrastructure, there's years ahead for us to continue to deliver big, big numbers.
Are you holding off on hiring until you can see basically what the economy is going to do?
We really, again, are trying to be more productive, more efficient with the resources that we have. So I'd say, you know, as we look out, we're pretty much flat.
I want to talk a little bit about what's going on with the commercial side of the business, get back to the products, because that seemed to be the part of your business that was struggling. For the second quarter, sales were down 11%. Now, you told investors on the conference call that you were confident that the commercial side of the business could navigate this economy. What do you mean by that? I mean, how are you going to do that?
Yeah, the commercial side of the business, which some people might call food service, is about 1/3 of our business. The drop in sales revenue is almost entirely because of the pass-through wheat costs on our flour milling business. So it's a very strong business. It's just when wheat costs are down, flour prices are down, but our mix of business is still very, very good. So that accounts for the revenue drop. On our biggest piece of the commercial business, which is Lamb Weston, we're the biggest potato company in North America. The business is a little bit soft now because of restaurant traffic. However, we compete primarily in the quick serve restaurants, and that has been the segment that has been the least impacted.
Yeah, I was going to say that. So do you think that things are going to change? I know you're expecting this trend to continue with people eating more at home, but any switchback or any increase in the people eating out at some point?
I'm sure at some point that will flip a little bit. Right now, I think we're in a kind of a bottoming out, flattening out period. So I think that mix is still going to continue to favor eating at home a bit more, and we feel very good that the mix of our portfolio can prosper within that.
Let's talk about more of the mix of your portfolio. Strong cash position as well. The stock is trading near a 52-week high. So what does that mean for acquisitions? Are you looking for anything to add to the brands you already have?
We clearly are going to be in a pretty good cash position. We are always taking a look to help our portfolio grow even more. What we're not going to go out and do is make a huge transformational acquisition at this point, but what we're looking at are things that we could potentially bolt on to our business and take advantage of the strengths that we have today.
Is that because of the economy, Gary? Let me get your sense from the CEO suite. You know, what is your view of the economy right now?
I think it's really flattening out, and that it will stay, bump along. Some people call it, an L or a bathtub. I subscribe to that. I think it's really all about jobs. And until we really see a significant change in the outlook and the confidence for jobs, I believe we're going to be in that kind of flattening out period. I think we've gone through the worst shocks, but there's no snapback, dramatic snapback in sight. So I don't really ascribe to the kind of jobless recovery term. I think it really is all about jobs and confidence, but I think the worst is in the past.
All right, I know that Julie is going to be talking this hour about health care. As a CEO, let me get your sense about health care, how it impacts your company and the costs.
Well, clearly, in this zero overhead growth kind of state we're in, a benefit that continues to cost more and more is tough to manage. What we would really like to see are these significant inefficiencies wrung out of the system. That's a very, very difficult task for someone a lot smarter than me to try and tackle. But we see that as an issue, and it's tough for us to be able to absorb the continuing inflation that we see in healthcare.
All right, Gary Rodkin, thanks so much. Again, thanks to Gary Rodkin. He's president and CEO of ConAgra Foods. Julie, back to you.
Monica, thank you very much for bringing us that. Really appreciate it.